taxes provide the most important revenue source for the government of the People's Republic of China. As the most important source of fiscal revenue, tax is a key component of macroeconomic policy, and greatly affects China's economic and social development. With the changes made since the 1994 tax reform, China has preliminarily set up a streamlined tax system geared to the socialist market economy. China's tax revenue came to 11.05 trillion yuan in 2013, up 9.8% on 2012. The government agency in charge of tax policy is the Ministry of Finance. For tax collection, State Administration of Taxation. As part of $586 billion economic stimulus package of November 2008, the government plans to reform the VAT, which could cut corporation taxes by 120 billion yuan. 1. Types of taxes. Under the current tax system in China, there are 26 types of taxes, which, according to their nature and function, can be divided into the following 8 categories. Turnover taxes. This includes 3 kinds of taxes, namely, value-added tax, consumption tax and business tax. The levy of these taxes are normally based on the volume of turnover or sales of the taxpayers in the manufacturing, circulation or service sectors. Income taxes. This includes enterprise income tax and individual income tax. These taxes are levied on the basis of the profits gained by producers or dealers, or the income earned by individuals. Please note that the new enterprise income tax law of the People's Republic of China has replaced the above 2 enterprise taxes as of January 1, 2008. Resource taxes. This consists of resource tax and urban and township land use tax. These taxes are applicable to the exploiters engaged in natural resource exploitation or to the users of urban and township land. These taxes reflect the chargeable use of state-owned natural resources, and aim to adjust the different profits derived by taxpayers who have access to different availability of natural resources. Taxes for special purposes. These taxes are city maintenance and construction tax, farmland occupation tax, fixed asset investment orientation regulation tax, land appreciation tax, and vehicle acquisition tax. These taxes are levied on specific items for special regulative purposes. Property taxes. This encompasses house property tax, urban real estate tax, and inheritance tax. Behavioral taxes. This includes vehicle and vessel usage tax, vehicle and vessel usage license plate tax, stamp tax, deed tax, securities exchange tax, slaughter tax and banquet tax. These taxes are levied on specified behavior. Agricultural taxes. Taxes belonging to this category are agriculture tax and animal husbandry tax, which are levied on the enterprises, units and/or individuals receiving income from agriculture and animal husbandry activities. Customs duties. Customs duties are imposed on the goods and articles imported into and exported out of the territory of the People's Republic of China, including excise tax. Tax legislation. State organs that have the authority to formulate tax laws or tax policy include the National People's Congress and its Standing Committee, the State Council, the Ministry of Finance, the State Administration of Taxation, the Tariff and Classification Committee of the State Council, and the General Administration of Customs. Tax laws are enacted by the National People's Congress, for example, the Individual Income Tax Law of the People's Republic of China, or enacted by the Standing Committee of the National People's Congress, for example, the Tax Collection and Administration Law of the People's Republic of China. The administrative regulations and rules concerning taxation are formulated by the State Council, for example, the detailed rules for the implementation of the Tax Collection and Administration Law of the People's Republic of China, the detailed regulations for the implementation of the Individual Income Tax Law of the People's Republic of China, the provisional regulations of the People's Republic of China on value-added tax. The departmental rules concerning taxation are formulated by the Ministry of Finance, the State Administration of Taxation, the Tariff and Classification Committee of the State Council, and the General Administration of Customs, for example, The detailed rules for the implementation of the provisional regulations of the People's Republic of China on value-added tax, the provisional measures for voluntary reporting of the individual income tax. The formulation of tax laws follow 4 steps: drafting, examination, voting and promulgation. The 4 steps for the formulation of tax administrative regulations and rules are: planning, drafting, verification and promulgation. The 4 steps mentioned above take place in accordance with laws, regulations and rules. Besides, the laws of China stipulates that within the framework of the national tax laws and regulations, some local tax regulations and rules may be formulated by the People's Congress at the provincial level and its standing committee, the People's Congress of Minority Nationality Autonomous Prefectures and the People's Government at provincial level. The following table summarizes up the current tax laws, regulations and rules and relevant legislation in China. Current tax legislation table Note: the provisions of criminal responsibilities in supplementary rules of the Standing Committee of NPC of the People's Republic of China on penalizing tax evasions and refusal to pay taxes and resolutions of the Standing Committee of NPC of the People's Republic of China on penalizing any false issuance, forgery and/or illegal sales of VAT invoices have been integrated into the criminal law of the People's Republic of China revised and promulgated on March 14, 1997. Foreign investment taxation. There are 14 kinds of taxes currently applicable to the enterprises with foreign investment, foreign enterprises and/or foreigners, namely, value-added tax, consumption tax, business tax, income tax on enterprises with foreign investment and foreign enterprises, individual income tax, resource tax, land appreciation tax, urban real estate tax, vehicle and vessel usage license plate tax, stamp tax, deed tax, slaughter tax, agriculture tax, and customs duties. Hong Kong, Macau and Taiwan and overseas Chinese and the enterprises with their investment are taxed in reference to the taxation on foreigners, enterprises with foreign investment and/or foreign enterprises. In an effort to encourage inward flow of funds, technology and information, China provides numerous preferential treatments in foreign taxation, and has successively concluded tax treaties with 60 countries: Japan, the USA, France, UK, Belgium, Germany, Malaysia, Norway, Denmark, Singapore, Finland, Canada, Sweden, New Zealand, Thailand, Italy, the Netherlands, Poland, Australia, Bulgaria, Pakistan, Kuwait, Switzerland, Cyprus, Spain, Romania, Austria, Brazil, Mongolia, Hungary, Malta, the UAE, Luxembourg, South Korea, Russia, Papua New Guinea, India, Mauritius, Croatia, Belarus, Slovenia, Israel, Vietnam, Turkey, Ukraine, Armenia, Jamaica, Iceland, Lithuania, Latvia, Uzbekistan, Bangladesh, Yugoslavia, Sudan, Macedonia, Egypt, Portugal, Estonia, and Laos, 51 of which have been in force. Urban and township land use tax 1. Taxpayers. The taxpayers of urban and township land use tax include all enterprises, units, individual household businesses and other individuals. 2. Tax payable per unit. The tax payable per unit is differentiated with different ranges for different regions, that is, the annual amount of tax payable per square meter is 0.5 yuan to 10 yuan for large cities, 0.4 yuan to 8 yuan for medium-sized cities, 0.3 yuan to 6 yuan for small cities, or 0.2 yuan to 4 yuan for mining districts. Upon approval, the tax payable per unit for poor area may be lowered or that for developed area may be raised to some extent. 3. Computation. The amount of tax payable is computed on the basis of the actual size of the land occupied by the taxpayers and by applying the specified applicable tax payable per unit. The formula is, tax payable equals size of land occupied tax payable per unit. 4. Major exemptions. Tax exemptions may be given on land occupied by governmental organs, people's organizations and military units for their own use. Land occupied by units for their own use which are financed by the institutional allocation of funds from financial departments of the state. Land occupied by religious temples, parks and historic scenic spots for their own use. Land for public use occupied by municipal administration, squares and green land. Land directly utilized for production in the fields of agriculture, forestry, animal husbandry and fishery industries. Land used for water reservation and protection. And land occupied for energy and transportation development upon approval of the state. City maintenance and construction tax equals 1. Taxpayers, the enterprises of any nature, units, individual household businesses and other individuals who are obliged to pay value-added tax, consumption tax and or business tax are the taxpayers of city maintenance and construction tax. 2. Tax rates and computation of tax payable, differential rates are adopted, 7% rate for city area, 5% rate for county and township area and 1% rate for other area. The tax is based on the actual amount of VAT, consumption tax and or business tax paid by the taxpayers, and paid together with the three taxes mentioned above. The formula for calculating the amount of the tax payable equals tax base, tax rate applicable, equals fixed assets investment orientation regulation tax equals 1. Taxpayers, this tax is imposed on enterprises, units, individual household businesses and other individuals who invest into fixed assets within the territory of the People's Republic of China. 2. Taxable items and tax rates, table of taxable items and tax rates, for some residential building investment projects, the rate is 5%. 3. Computation of tax payable, this tax is based on the total investment actually put into fixed assets. For renewal and transformation projects, the tax is imposed on the investment of the completed part of the construction project. The formula for calculating the tax payable is, tax payable, amount of investment completed or amount of investment in construction project applicable rate, equals land appreciation tax equals, 3, computation of tax payable. To calculate the amount of land appreciation tax payable, the first step is to arrive at the appreciation amount derived by the taxpayer from the transfer of real estate, which equals to the balance of proceeds received by the taxpayer on the transfer of real estate after deducting the sum of relevant deductible items. Then the amount of tax payable shall be calculated respectively for different parts of the appreciation by applying the applicable tax rates in line with the percentages of the appreciation amount over the sum of the deductible items. The sum of the amount of tax payable for different parts of the appreciation shall be the full amount of tax payable by the taxpayers. The formula is, tax payable equals £. 4. Major exemptions. The land appreciation tax shall be exempt in situations where the appreciation amount on the sale of ordinary standard residential buildings construction by taxpayers for sale does not exceed 20% of the sum of deductible items and when the real estate is taken over or repossessed in accordance to the laws due to the construction requirements of the state. Urban real estate tax equals, 1. Taxpayers, at present, this tax is only applied to enterprises with foreign investment, foreign enterprises and foreigners, and levied on house property only. Taxpayers are owners, mortgagees, custodians and or users of house property. 2. Tax base, tax rates and computation of tax payable, two different rates are applied to two different bases, one rate of 1.2% is applied to the value of house property, and the other rate of 18% is applied to the rental income from the property. The formula for calculating house property tax payable is, tax payable equals tax base, applicable rate. 3. Major exemptions and reductions. Newly constructed buildings shall be exempt from the tax for 3 years commencing from the month in which the construction is completed. Renovated buildings for which the renovation expenses exceed 1/2 of the expenses of the new construction of such buildings shall be exempt from the tax for 2 years commencing from the month in which the renovation is completed. Other house property may be granted tax exemption or reduction for special reasons by the people's government at provincial level or above. Vehicle and vessel usage license plate tax equals, 1. Taxpayers, at this moment, this tax is only applied to the enterprises with foreign investment, foreign enterprises, and foreigners. The users of the taxable vehicles and vessels are taxpayers of this tax. 2. Tax amount per unit. The tax amount per unit is different for vehicles and vessels. A. Tax amount per unit for vehicles, 15 yuan to 80 yuan per passenger vehicle per quarter. 4 yuan to 15 yuan per net tonnage per quarter for cargo vehicles. 5 yuan to 20 yuan per motorcycle per quarter. 0.3 yuan to 8 yuan per non-motored vehicle per quarter. B. Tax amount per unit for vessels, 0.3 yuan to 1.1 yuan per net tonnage per quarter for motorized vessels. 0.15 yuan to 0.35 yuan per non-motorized vessel. 3. Computation. The tax base for vehicles is the quantity or the net tonnage of taxable vehicles. The tax base for vessels is the net tonnage or the deadweight tonnage of the taxable vessels. The formula for computing the tax payable is, A. Tax payable equals quantity of taxable vehicles A, applicable tax amount per unit B. Tax payable equals net tonnage of taxable vessels A, applicable tax amount per unit. 4. Exemptions. A. Tax exemptions may be given on the vehicles used by embassies and consulates in China. The vehicles used by diplomatic representatives, consuls, administrative and technical staffs and their spouses and non-grown-up children living together with them. B. Tax exemptions may be given as stipulated in some provinces and municipalities on the fire vehicles, ambulances, water sprinkling vehicles and similar vehicles of enterprises with foreign investment and foreign enterprises. Individual income tax new tax rates announced September 2011, tax exemption, 3,500 for regular employees, 4,800 RMB non-residents, monthly tax tax rate, quick deduction. Tax governance. As of 2007, a paper reported that about two-thirds of tax revenue was spent at the local level and that the ratio of central revenue to total tax revenues reached a low of 22% in 1993, before rising to the 50% level following the 1994 tax reform. Revenue statistics. The table details China's revenue statistics from 1952 to 1997. Note: for 3 years, the tax revenue exceeded the fiscal revenue due to the excessive amount of losses by enterprises that largely reduced the fiscal revenue. Revenue breakdown in 1997 revenue breakdown by type of taxes in 1997. See also, State Administration of Taxation, General Administration of Customs, Ministry of Finance, List of Chinese administrative divisions by tax revenues. References. An overview of China's tax system. October 27, 2007. State Administration of Taxation. Tax System of the People's Republic of China. Beijing Local Taxation Bureau. Further reading, Liu, Zhou. Taxation in China. Cengage Learning Asia. ISBN 981-254-438-0. Li, Jinyan. Taxation in the People's Republic of China. Greenwood Press. ISBN 0-275-93688-0. Brian, Donald. Taxation in Modern China. Routledge. ISBN 0-415-92018-3. Bahl, Roy. Taxation Reform in China. University of Michigan Press. ISBN 0-472-59003-0. Wang, Xuan Hui. Taxation in China 1997/98. Sweet and Maxwell. ISBN 962-661-003-4. Gillard, Timothy. Corporate and Individual Taxation in the People's Republic of China. Sweet and Maxwell. ISBN 0-85121-057-0. Bernstein, Thomas. Xiaobo Lawan Quarter. Taxation Without Representation in Contemporary Rural China. Cambridge University Press. ISBN 0-521-81318-2. Han Liang Huang. The Land Tax in China. University Press of the Pacific. ISBN 1-4102-0867-2. Li, Jean. Alan Paisley. Transfer Pricing Audits in China. Palgrave Macmillan. ISBN 0-230-00196-3. Wang, Xiaogang. Angang Hu. The Chinese Economy in Crisis, State Capacity and Tax Reform. M.E. Sharp. ISBN 0-7656-0766-2. Zhang, Xin. Law and Practice of International Tax Treaties in China. Wilde, Simmons and Hill Publishing. ISBN 1-898029-62-8. Environmental Taxes, Recent Developments in China and OECD Countries. OECD. 1999. ISBN 92-64-17092-8. Jin, Xiaowu. Regulatory Environment of Chinese Taxation. William S. Hayne and Company. ISBN 0-8377-3325-1. China Tax Guide. USAIBP 2003. ISBN 0-7397-6280-X. Dimansescu, Catherine. China Tax and Financial Planning Briefing. World Trade Executive. ISBN 1-893323-87-0. Yu, Binging. Law of the People's Republic of China on the Administration of Tax Collection. Foreign Languages Press. ISBN 7-119-02477-9. Fulton, Trish. Jinyan Li. Dianqing Zhu. China's Tax Reform Options. World Scientific Publishing. ISBN 981-02-3447-3. Gensler, Howard. Jialiang Yang. Yunfu Li. A Guide to China's Tax and Business Laws. Sweetened Maxwell Asia. ISBN 962-661-122-7. China Master Tax Guide. Clua Law International 2005. ISBN 90-411-2424-1. Moser, Michael. Winston K.Z. China Tax Guide. OUP China. ISBN 0-19-590610-1. Gensler, Howard. China Tax and Accounting Manual. Asia Law and Practice. ISBN 962-936-035-7. Ferrer, Paolo Divide. China Euro Unregistered Trademark S Role and Contribution in the Global Governance of Climate Change, Institutional Adjustments for Carbon Tax Introduction, Collection and Management in China. Journal of World Energy Law and Business, Oxford University Press, Volume 8, Issue 6, November 2015. Retrieved November 30, 2015. History Huang, R. Taxation and Governmental Finance in 16th Century Ming China. External links, The Economist. China's Tax System. April 12, 2007.